Hey everybody, this is Jose. How are you, everyone? We're about to get started in a few seconds. As always, super appreciated if you could just type a quick hello on the chat box. That would tell me that you hear me, so sound is good. Plus, as always, is a good way to get started with a quick hello. Please do that. And we're starting in 20 seconds. Thank you so much, guys. Thank you, Joe. Thank you so much. Cool. Jeff, how are you, my friend? Very good. Perfect. So we just hit the starting time for the session. So let's begin. Official welcome, everybody. This is Jose Blasco. Today is April 28, 2022, and this is Options with Options. This is the place where we spend some time trading options, isn't it? And we love it because it's beautiful. Anyway, before we get started, disclaimer on the upper left side of the screen. Please read it carefully. This is important information. As always, do not skip it. It is important, so I'm counting on you to read it completely. Even if you are a regular in the sessions and you've read it before, again, it's important for me to point at it, okay? So thank you so much for that. The agenda for today, we're going to be looking at the market. We're going to be reviewing the trades that we have. Basically, it's kind of reviewing the trade from yesterday, kind of. And then from there, get into planning more trades, okay? Christian, good to see you. Very nice. I can see you have been catching up with yesterday. Okay, very good. You and I need to catch up later as well, isn't it, Christian? Very good. Mark, how are you, my friend? Very good. Perfect. Okay, so everybody's here. Everybody's ready. Let's begin. Again, since we have a new website, I'll give you a little quick tour. I would say that probably most of you who are connected live, you've seen it before because we covered this yesterday. I want to do it a bit quicker today. But again, for the ones of you who are watching this recorded, this may be useful to you. So good news, my friends, we have a new website. We are super happy. Still plenty of work to do on this side to add certain functionalities and polish others. But in any case, there is a bit more of a good or of a better environment, I would say, for you to be in here. Okay. A few sections which are important for you to know is that here you have the logout and login button on the top. So if you're logged in, it shows us logout. If you're logged out, it shows us login. And then when you click on live trading, okay, so then you come to the place where the session is happening, and of course you could make this full screen and everything, as you probably know already. Scroll down a bit. Here's the calendar. Okay, when it comes to the calendar, a huge recommendation. So let's say you don't want to miss the session with Josip, so you click on Josip. Okay, this will load that session, and once the session is loaded here in front of you, important recommendation, you can add it to your Google Calendar, you can add it to your iCalendar or export it to Outlook, and that way you are reminded and you don't miss such sessions. Okay, so keep that in mind. You can also change the views, and if you're interested in looking at the weekly view or just a list, we're gonna let you play with this. Okay, that's not that magic, but certainly very useful. Meeting room. We created a meeting room so you guys can come in here and meet on your own in a way that is totally independent. Okay, so you just type, you come to this page, which is tradewithufos.com/meetings. If you forget the URL, you just scroll all the way to the bottom and it says traders meetings right here. So you just do that. And when you come in here, you type your name, click join meeting. I won't do it because I'm using the camera already. And the moment you come in here, so you can use camera, microphone, share screen, all of it, and everybody could do it at the same time actually. So you guys can have good trading collaborations. Okay. Yes, the event time is mentioned if you click. I mean, if you look at the weekly view, it's going to show it to you on local time as well as on New York time. If you are looking at the monthly view, it won't show. You just need to click on it, and the moment you click on it, it's loading. So the moment you click on it, or you hover over, so now you can see here the time using New York time zone or the time using your local time zone, whatever zone that is. Okay, so you just need to hover over. Okay, so good observation there. Jeff. So again, coming back to the meeting room, you can use that at your discretion. What's important is that you guys get in touch, get organized, so you can meet here whenever you'd like. This is a room with no moderation, so I don't need to be here. Josip doesn't need to be here. Boyan doesn't need to be here. Becky doesn't need to be here. It's for you guys. Okay, so the one thing that we're asking you to do, which is something that you would do naturally, but I do have to mention it, is to be respectful and courteous. To be responsible, to be disciplined, to be kind, all of it. And if someone is not, just leave the room and send us an email, and we'll take care of it. Okay. That's it. Okay, so simple, hopefully useful. You guys need to let me know how is it going as you start meeting and so on. Another thing I was sharing yesterday is that we are about to publish our first book, which is also super exciting for us. It's been a book that's been like around 3 years in the works, so it's a lot of work in here. And it's pretty cool. The first one we're releasing is on Forex. We have plans to release more books in the future, but we'll do one step at a time, okay? So if you want to purchase the book at some point, you can always click on purchase, okay? And you can put your name in the waiting list, and that way, when the book is in pre-release, we will let you know, and you can purchase it at a discounted rate, okay? And then finally, the page I would normally mention, or all of us as your instructors we would normally point at, is the question page, if you wish, where in my case here it says Jose Blasco. There is a spreadsheet here that we'll start using soon. Josip has been using it for a while already, but we're going to be, all of the instructors will be using it at some point, and we're going to be documenting trades and so on. And here, when you scroll all the way to the bottom part, so you have the question section. With Joe sent me a message letting me know that he was having some issues, so we are looking into it, Joe, so we'll get back to you on what we think happened and how to fix it, okay? Yes, Christian, reading you. Yes, hopefully. I have the same hopes. I'm pretty positive it should be okay. Screen bad again? Okay, now. Okay, got it. Perfect. Good. So that's it. Okay, so enough about the website. Let's get into trading. So here's the S&P. Okay, well, no, actually, this is Verizon. Let's move into the S&P. So here's the S&P, okay? And so what do we have here? We have the S&P. Let me move to 55 in the time frame. So we have the S&P that is trading today at 0.68% higher than yesterday. We are still in a down climate, okay? Not a surprise. Given how extended it was, it's going to take a few extra candles to go above the average and change climate. So we're getting closer, I guess. That's not a surprise, but again, we can see and conclude the same thing that we concluded yesterday when it comes to the fact that this climate is, from a statistical point of view, overextended 2.05 out of 102, as well as 5 out of 3. In both cases, we're talking about a market condition which is statistically non-sustainable. Of course, the climate condition is to be respected, so you don't want to be too aggressive. When it comes to taking longs, the way I handled it yesterday, given the fact that the VIX was quite high and the VIX was hitting relevant. Let me move to the VIX for a second. The VIX was hitting relevant UFOs, okay, and I was expecting the VIX to drop, so I wanted to lock in some high levels of premium, which we did with the trade that we did yesterday, which we're going to review in a moment. So yesterday I was willing to be a bit more aggressive with getting long, even though I just said, careful, the climate is still red, right? But the reason I was more aggressive on being long is because I was using an option strategy that gives me a buffer that allows me to be wrong, right? I was selling puts much lower price, so there is some level of room for the price to keep moving lower before I start getting into trouble, okay? So because of that, I was happy to be a bit more aggressive than what you would normally do when you're waiting for a change of climate and get into trades that are, in a way, safer, statistically speaking. Also, trades that, for this kind of trade, I'm normally willing to shoot for a greater level of deltas to be more aggressively directional. In this trade, since I was selling puts below price and using that credit to buy calls, so then while I was a bit aggressive because the climate is still red, This is less aggressive because you have these puts much lower, and on top of that also less deltas. Okay, so you lose at a lesser pace, as well as the real loss happens if the market was to continue falling by a significant amount. Okay, so again, when we use the words aggressive, conservative, all of those words, there are many times where there is a little bit of subjectivity in what those words may mean to different people, and that's why I'm trying to elaborate a bit more on my thinking yesterday, and what I just said today, which is careful is still right, but careful doesn't mean do nothing. Okay, so it depends on the tools that you have in your tool belt. Okay. Anyway, so this is the climate condition when looking at the implied volatility of calls versus the puts. We can see that today the sentiment that is building up from behind the scenes is more bullish than yesterday. The calls, the blue is still above the gray, the calls above the puts. But notice how the distance is more exaggerated in between those two lines, which is a good thing, suggesting the market is likely going to push higher. Okay, so looking forward to see that happen. You can certainly see that there is a pretty interesting fight, uh, you know, using the price point that was yesterday high. There is a pretty interesting fight. Price today touch yesterday high, tried to go above. Many sellers came in, maybe a lot of profit taking, not sure what it was. The market was coming down. So now the real measurement will be, is it going to go through? If it goes through, I guess we're going to see a change of climate and therefore some continuation. Okay, that would be the expectation, and therefore the rationale for the trade, where the market conditions today are kind of confirming that yesterday's approach was not crazy, and definitely things are becoming a bit more high probability, especially when we see implied volatility of the calls further above the implied volatility of the puts. Okay, nothing is guaranteed in trading, and even if you are 1 cent away from reaching your target, you can have the market roll against you all the way. So nothing is guaranteed until you exit, but certainly it's nice to see that things are moving towards the right direction. So from a volume map point of view, again, plenty of puts, and you may be like, oh, isn't this a concern? Well, not necessarily. Okay, why? Because being the implied volatility of the calls greater than the implied volatility of the puts, that number, which is on the put side, is a winning number on the put side. That number basically represents that all those puts are being sold. Okay, just like what we did ourselves yesterday. We are selling puts yesterday, right? So all those puts were being sold, and therefore you have the reason for this greater ratio in the favor of the puts. But if the puts are being sold, again, it's a bullish sentiment that is building up. The puts could be sold at a lower price point, though, right? There could be lower strikes. So then, while there is a bullish sentiment happening, the market may need to go lower before it really bounces, okay? Which is why we put the trade together yesterday the way we did, okay? But again, all looking good, nothing really to comment on. And going back to the VIX, here we go. So going back to the VIX, so again, the VIX now is trading at 30%. Yesterday was 30 something when we did the trade. Looking good, I would say. Again, if it goes higher, there is a red UFO waiting, and if it goes lower, there's decent amount of room for the VIX to fall, which would be beneficial to our trade. Okay, our trade. Remember, we are selling double the amount of puts than the call we bought, and therefore a drop in implied volatility would help those puts very much, and may even put us in a position where we can do some sort of rolls or maintenance, which I'm going to discuss surface level now because it's obviously way too soon to do any maintenance. We just entered the trade yesterday, but I want to point at a couple of things just in case next week, in the middle of the week, before we meet again on Thursday, something needs to be done so you know what to do, okay? Let me see, more comments. Ahmed, how are you, my friend? It's good to see you with us. Christian, what comparison and SPY price and diametrically opposite makes me question the value of volatility comparison a bit. Well, you can go ahead and backtest. Go back in time, Christian, and just backtest, and you will see different market conditions, and you will see the impact and the power of that measurement. Actually, in my style of trading, it's an element which I give it a great level of importance, as you probably feel from my words. Okay, but again, there are many ways on how to trade, and you don't need to approach it the way I do. If you have other rules that make you more confident, maybe because you have used them for longer or whatever, it's fine. Okay, it's totally fine. Uh, yeah, Christian, a price waterfall shouldn't happen. Yes, you're right, but you are missing a point, which, by the way, I just phrased. You may have more puts being sold than calls being bought, for example. Sorry, more puts being sold than calls being sold, or more calls being bought than puts being bought. But the next question is at what strike, right? So, like, if you got plenty of puts being sold, which is creating a bullish sentiment, okay, which will tend to move the market, okay, and I've seen that throughout the years, okay, often enough to be part of my trading plan. The issue is that it doesn't mean that the move is going to happen immediately. Okay, that would mean that all calls were traded at the money, which is not the case. Okay, so we are just assessing the climate from the angle of the auto climate, which is basically price action. We're also assessing it from the point of view of derivative data, in this case, data coming from the options arena in the form of implied volatility calls and puts. All of this is adding odds for what direction the market should take. Okay, but of course, when the move starts and when the move ends, the tool that gives you more precision for that is the UFOs, right? So careful with that. Okay, that of falling into the trap of the only thing I care about is, I'm not saying this is you, by the way, but it's easy somehow to forget. And next thing you know, because you see the implied volatility of calls above puts or vice versa, you see the climate of being a certain color. Next thing you know, you're like, that's it, I'm getting into the trade. Where now you forgot about the timing, right? So what we're trying to do with the auto climate and the volatility comparison is to make sure that when we get into a trade first, we are not in the wrong side of the market. So that's the first goal, to avoid being on the wrong side of the market. Okay. Second goal, that if we're going to be on the right side of the market, we put ourselves in a position where the trade is likely going to last by a certain amount of days at least. So you have a fair chance of reaching a target which is relatively far. If you were to enter when it's the wrong time, well, first, you may be in the wrong side of the market, or maybe you are on the right side of the market, but you enter too late, and therefore you don't have time to reach a target which is far enough, right? So what we're trying to do with auto climate and options data, volume map, volatility comparison, etc., is to understand the right market, the right side of the market in which to be. And we are also trying to add odds for us to not only be on the right side, but also be in a position where if we enter now, the trade has room to go, the trade has the opportunity to live longer. Okay, that's what we're trying to do with the information I got on the left side of my screen. With what I have on the right, which is the UFOs, the speed bombs, all of those things, then we are trying to define the entry and the exit. Okay, so keep that in mind when you observe the volatility comparison. This is not a timing tool. Okay, this is not a timing tool. Keep it that way. Okay, it's about a matter of understanding the sentiment, not when should you buy and when should you sell. Okay, it's more about when should you be a buyer, assuming other conditions are met. When should you be a seller, assuming other conditions are met. Okay, cool. On the other hand, the volume map still bearish all the way out. No, it's not bearish. You have more quantity of puts traded, which is not bearish. Okay, because the implied volatility of the puts is below the implied volatility of the calls. Okay, so that means that more puts are sold than calls. Okay, but they are being sold. Puts being sold is bullish, not bearish. Okay. Okay, good. Okay, great conversation, guys. Okay, I hope this is eye opener, clarifying. Love the conversation. This is a relevant one. I could sense maybe just a little bit, and maybe it's on me. Sometimes I rush a bit through the trade. So if I have confused anyone, hopefully this conversation has been clarifying. Okay, let me know. Let me know how you guys feel about everything I said. Kind of like a way to summarize it is what I have on the left side of my screen is to define the side of the market in which I want to be in, so I have time to reach my targets. And what I have on the right side of the screen is to define entries and exits and timing. Okay, so let me know if you are with me on that concept, because it's critical. Okay, positions. So what do we have? Well, G, this is basically almost over. We reviewed that yesterday. So let's see what's happening with G. Oh, sorry. What did I just do here? Okay, here, risk graph. Yes. Where am I clicking? Risk graph. Okay, here. Not sure why I did. So with GE, this market has been dropping even more than yesterday. Okay, so we are even more to the left. It's trading at 76 now. Okay, and that puts us in a position of extremely high probability of profit. We are very likely going to make the full profit here, which is $54 per contract. Expiration date is on the 29th. And therefore that's tomorrow, so it's almost over. Okay, now of course something crazy could happen, the market rally like crazy, and next thing you know you end up here. Could that happen? Yes. Is it likely? Absolutely not. In any case, watch it. Okay, watch it, because it would be a shame if that's the case, and if that was to be the case, just exit before you get into the red zone. Okay, so nothing else to comment. We talked about this yesterday. And then Verizon, which is the new trade that we put together yesterday. Okay, actually, maybe we can see it better here on TOS. So when we look at Verizon, it shows us minus $31.5 of P&L at this moment in time. Okay, in here it shows us minus 25. Again, that depends on how we calculate the midpoint. Also, thinkorswim in the username I use in the sessions is delay data, so there is a little bit of a difference. So basically, we are losing a tiny bit of money. Okay, just tiny bit. Why is that? Well, it's obvious. It's because Verizon went lower. Okay, so let's load Verizon. Okay, let's load Verizon. Let me go back to where I got my speed bump, which I believe was here. Yes, exactly. So yesterday we entered there, where the horizontal line is. Currently we are trading here. So we are like $1 lower than where we entered yesterday. Okay, that's the risk when you are aggressive with the climate. Okay, but here's the beauty of building the trade the way I did yesterday. Even though we've dropped $1 since the entry yesterday, and by the way, $1, you may say, that's not too much. Well, wait a moment. Let's do the math. $1 in a $49.5 stock, okay, that's 2%. So that stock is 2% lower compared to our entry yesterday, which is a lot. And the P&L of this trade is only showing negative 30, right? So that's the beauty of having created that offset, having seen the VIX go down because we entered when the VIX was higher yesterday, etc., etc., etc. Okay, so now what are we gonna do here? Nothing. Okay, we need to wait. Okay, as the market starts going higher, assuming this happens. I mean, if the market doesn't go higher, this is a directional trade. We're gonna lose. Okay, and we'll talk about if we could do some sort of an offset, which of course we can. We'll talk about this later if that's the case. But in the meantime, we are expecting this to go higher, right? So what are we gonna do? We're gonna wait and be patient for this to happen. And as this starts moving higher, okay, remember, we are owning calls above and puts below. So if that market starts going higher, okay, we are gonna start considering closing those puts, which would remove the risk of the trade if enough profit was made to pay for the calls. And then we're going to go ahead and convert that call, and we're going to sell calls against the call we own to convert this interesting trade into now a vertical bull call spread. Again, it's way too soon for me to go deep into detail because, it's, unless the market just like rally, like going to the moon like crazy. So it doesn't look that this is going to happen anytime soon. We got plenty of time. I believe we used July 15 expiration, if I'm not mistaken. So we have plenty of time to do all those evolutions of our position. We'll be working on that. But that's it. Okay. This trademark has no stop. At least the way I design it. Can you use a stop? Of course. Okay, absolutely, you could. But this trade is designed to not to use stops. Why? Because since I sold puts and I bought puts below, my risk is limited. Now, of course, my risk is $1,000 because I got 2 times $500 of risk. Okay, the distance between strikes yesterday was $5. That's $500. So this trade has a $1,000 of risk, as I stated yesterday. If that's too much for you, so then you need to calculate where you want to have your stop. And I would even say you should not be on this trademark if that was the case. But this trade is not designed to use a stop, at least the way I planned it yesterday. Okay, which you could certainly trade a variation of the trade I designed yesterday. Okay, let me take a look at a few missing text here. Christian, yes, love the UFOs. Last week, a big red UFO on the daily and weekly contradicted auto climate, and sure enough, auto climate changed quickly. Thanks for clarifying. Well, not being a timing tool. Okay, got you. Perfect. Very good. Joe, I was going to ask why we didn't put a call butterfly on the horizon. You could, but since those calls would be so far away, it would not help that much, and you would kill a lot of the deltas. So this is something to be done later. Okay, Joe. If this trade starts moving, then we're gonna act on it. But acting too soon is basically going to kill the deltas in a way where you almost end up with a non-directional trade. Okay, almost. Okay, this trade is already a credit trade. Okay, as we speak, it's already a credit trade. If the stock was to just stay above 47, you would end up making a credit of, I think it was $50, something like that. So it's already a credit trade. You could think of it. Some people out there in the world may think of it as a non-directional trade, even though it's directional because it has a great quantity of deltas. But if you had made it, if you had used those puts and then buy a call butterfly instead of just a call, you would have removed a lot of the deltas, okay, given this setup. So I didn't because of that reason. Okay, you could do other variations as well, just to open your mind, Joe, if you want to play with that. What you could have done is, instead of selling the puts below and buying the call higher, you could have bought calls at a lower price. Of course, they would be way more expensive. So then you could butterfly them, okay? And then here you have a butterfly instead of just a call. And because the calls are closer, they give you more delta. And because it's a butterfly, they give you less cost. So, you would end up with something with a different risk profile, definitely. But again, just to keep it very simple, you would end up with something similar from a delta point of view. If I can say it this way, it's not exactly true, but something like that. And you could argue it would be a valid starting point. Why not? But at the same time, now how many more commissions would you be paying, right? So, and yeah, so anyway, options give you options, my friends. There's so many things we can do, but that was my application yesterday with all the rationale discussed. Okay. Good questions. I love it, my friends. Mark, put a stop order in somewhere. Okay, we talked about this already. Got it. Perfect. Okay, so that's all we got, and therefore it's now time to look for new trades. Okay, so I'm gonna take a sip of water. Now, what's my plan today for trades? Well, today I could go the route of finding a similar setup compared to yesterday. Okay, we are still dealing with a climate which is even more exaggerated now. We are still dealing with a VIX which is relatively high. I could certainly do that. Okay, and I think it would be healthy to do it because you guys got many questions. So maybe we can do it again with a different stock, and see if that helps as well to clarify and kind of reinforce this process. So you guys then can practice these things on your own, and it's clear in your mind. So happy to do that. Okay, but also something to consider, and I'm not sure we'll have time to do all of it, but something to consider is that, let's say you did the trade I did yesterday yourself at home, okay, or if you trade in the office, wherever you trade. But my point is, you were by yourself, you were looking at the market, you saw the market conditions, you decided, I want to get long deltas, and you got into this trade. And now you look at your portfolio and it's like, hey, I only got long deltas because in my account right now, and please ignore the Yelp thing that I left there a long time ago by mistake. In my account, if you look at the two positions I got above, okay, and let's pretend that's you. You have a directional trade, okay, with Verizon with 51 delta, that's directional, and then your G trade, it's not directional, it's 0.01 delta, it's expiring tomorrow, right? And so what what can you do? Well, if I add another long trade, I'm doubling my deltas, right? And so what if I'm totally wrong and then the market keeps falling? I'm gonna hurt myself. On another hand, adding shorts as a hedge, if I had multiple positions and I want to add a few, I want to add something short as a hedge, okay, that makes sense. But remember, the climate is quite overextended. I mean, we got into long positions yesterday because we are not expecting too much of moves to the downside. And if you are like me, like at this moment in time, I only have one long position. So, hedging my long with a short, it's not giving me too much of a directional or profitable bias unless I am absolutely right in both trades, which is the one I'm short falls and the one I'm long rallies, right? So instead, my approach today, if I had what I have, which is one long and one trade that is about to expire, meaning one long. So what I would prefer to add is another non-directional trade. And because the VIX is high, I will go for an iron condor. So now I am reinforcing. Remember yesterday when we planned the long and we said, I'm being aggressive, but I'm giving myself a buffer that allows me to be wrong by a certain amount. So if I add a non-directional trade now, it's kind of like I'm reinforcing the buffer with a range trade where, if the market keeps falling, that other trade should be able to absorb that too. And, I am helping that buffer that allows me to be wrong. It's a form of a hedge, but which is a bit less directional because the climate being so overextended to the downside, especially when it's not about, when I look at the SPY, it's not about the fact that we got 5 out of 3, which is already, a situation. It's about the fact that we reached 2.05 out of 102. This is a 2 standard deviation measurement. This is a 1 standard deviation. So if we got double of this, that's 6, that now becomes a 2 standard deviations. But this one was double of this, which is equivalent to a 4 standard deviation that in the probability world should almost never happen, like almost never happen. Again, the markets are, more daring than almost never, and sometimes they really surprise us and slap us on the face. So I don't want to be overconfident. That's why I'm thinking of hedging. But instead of hedging by getting into short positions, given what I just said, I think I'm really, really, really too late to the party. I'm basically building a hedge that will probably lose. And since I only have one long, so it's kind of like, too much of it, right? So am I making sense, guys? I'm giving you a long conversation here. But again, this is the thinking of a trader. That's what's going through my mind as I see what I got in the account and the market conditions and all those thoughts are processing. And that's what I conclude, okay? It's basically, is trading strategy from a point of view of portfolio management, not from the trade strategy itself, but from the portfolio management approach. Okay. Let me know if this is making sense. So what I'm going to do is try to find another trade like what we did yesterday, just to reinforce what we learned yesterday, and then look for iron condors. That's what I'm going to do. Okay, and let's see if we can do one of each before the end of the session. Okay, so to do my analysis, I'm just going to go back to what we were doing yesterday. I'm going to be looking at reversal signals, stocks that are falling into speed bumps of support. Okay, I'm also going to be looking at stocks that have expensive options, which today I should find less than yesterday because the VIX is lower compared to yesterday. My friends, you guys got very silent on the chat box. I would really, really like to get some responses from you. Okay, thank you, Mark. Makes sense, but I would also check the weekly climate. Okay, got it. I like it. Okay, it's going to be a bit more restrictive. You'll get a few more no's when it comes to being allowed to take a trade based on your rules. I get it. It's a bit more restrictive, a bit more conservative. Absolutely nothing wrong with this, but you make a lot of sense, Mark. Okay. Christian, Jose, on the daily in the SPY, we have a red UFO just above price, and at the same time, a bullish Harami and a bullish Doji. How do you assess that? The answer, Christian, is what are the rules on your trading plan? Because the way I assess it, I just explained it, right? So I am not giving importance to that red UFO. I didn't even check. I don't even look at other timeframes. On the daily timeframe, I'm simply looking at the climate and the implied volatility differential. That's it. Okay, can you look at more information? Yes. Will you get contradictory signals? Of course. And then what do? Don't trade. So that's not my style. My style, I don't want to stop myself. I just made a comment to Mark based on his idea of utilizing the climate on the weekly time frame, which makes a lot of sense. I understand what he's trying to do, just like I understand what you're trying to do, Christian, looking at candlestick formations, looking at UFOs on a daily time frame as well. I get it. I understand what you guys are trying to do. It's not a bad idea in the sense that if you find everything you find everything in addition to what I do, and he's giving you permission to take the trade, then you have a better trade than me. But the disadvantage is that you will trade less often than me. And given my trading style, I want to be a bit more active. Okay, so I'm not stopping myself because of that, and therefore I don't even look at it. Will that give me a few more losses? Yes. Will that give me a fewer trades? Yes. Okay, that's my style. So there is nothing right, there is nothing wrong, and in the end, it's all about your trading plan, the rules that you decided to use, which probably come out of your experience, your trading mentality, trading personality, trading mindset, backtest exercises that you have done in the past, which help you to define who is the trader in you. Okay, and in that sense, we will disagree at times, and it's nothing wrong with disagreeing because we are all different. Okay, so that's my answer to you, Christian. So coming back to building the trade, so again, looking for speed bumps of support, looking for expensive options, stock filter, strong up, okay, scan list, import, penny increment options. I believe the auto climate we left it on check. Yes. So with all of this, I'm pretty positive the list is going to be empty. Scan, yes, it's empty. Again, this is more restrictive compared to yesterday, given the fact that the VIX went down and plenty of those implied volatilities went down. So already we were having a difficult time yesterday with greater than 80. So let's try CIV mean less historic volatility above 2 standard deviation. Let's look at this one. Still nothing. And let's check the last choice, which is top increase in the CIV mean in the last 5 days. And now we got Verizon still there, and we also have Boeing. Okay, so great. We have another candidate. Let's take a look at the chart and see if the setup agrees, and then we're going to be able to take a trade. Okay, so let's take a look. Christian, okay, so climate and volatility comparison. I remember a Becky session where she said, never go long with a red UFO above price on the daily. That's why I ask. I get you. And that probably has to do with Becky's trading plan. Okay. Again, it's a great decision. Okay. It's a great decision. But the more rules you put in place, the more you'll stop yourself from trading. And because we cannot predict the future, because we cannot use infinite amount of time frames and get everything lining up, there is a moment in time where you have to draw a line on the sand and say, okay, this is how far I go. From there, I don't care any longer. I'm willing to take risk. I am a perfectionist. I know you are a perfectionist, Christian. I know many of us are perfectionists. Okay, actually, that makes us good traders. But at the same time, if we overdo it, then we trade less than traders that may be less perfectionists. So we gotta modulate that to a level of our comfort. Wherever we feel the line should be, that's where we draw it. Okay. So Becky draws it there. I draw it here. Again, we are all different. Okay. So very good question, and I'm loving this conversation. Actually, we had a few conversations in a row in today's session, which are very rich. Okay, very very rich when it comes to defining how trading should be done. Okay, so thank you so much for bringing those topics, and I'm sure it's a very healthy conversation for many, and you guys are appreciating it very much, even if you're not the one who asked the question. Okay. Yeah. Yes, I get your question. I get your question. The one thing, the one word that catches my attention of your message there on the chat box is that the fact that you're using the word trying to stay with the program. Um, the program is to teach you how to trade in a way where everybody has their trading plans. So, we teach you how to use technology. We teach you how to understand the markets so you can have your trading plan with your unique set of rules. That's your program. Okay. So, I never stated or said, and I'm not saying that you are saying I did, but just out of clarification, I never said the only way to trade is the way I trade. Okay. So that's something important for you to understand. Okay. Cool. Let's continue. So Boeing. So what do we have? Well, first of all, a concern. We have a concern. Okay, with Boeing, the implied volatility of the puts is above the implied volatility of the calls. But with that said, okay, I would not take this risk. Yesterday with Verizon, we had a different setup. If I go to Verizon, so the implied volatility of the calls was above the implied volatility of the puts, meaning that there are many put buyers in that market. They may not be at the current price, but there are many put buyers. So if it falls a bit more, it should find buyers at some point, right? So that's the conclusion of this reading. With Boeing, we don't have that, and that automatically would stop me from planning the trade. Okay. Now, because I didn't have more opportunities of this sort today, unless I, ignore my list and I open the door to more stock symbols, And now, I can look deeper into possible opportunities, which I'm not going to do, but I could. So unless I had that and I had cases where the blue line is above the gray, then I wouldn't take the trade. Okay, given my rules again in this case. Now, out of kind of re-summarizing what we did yesterday because it's fresh, let's pretend for a moment. I won't take the trade, but I will rephrase it. Let's pretend for a moment that the blue line is above the gray. What would you do? Okay, well, you would want to move to a daily time frame. You will want to make sure UFOs are 50% or more. And if they are not, you will move to the 2 day. And if not, you will move to the 3 day, looking for UFOs, which are providing that particular value, right? And from there, you would just find the prior pivot, draw a speed bump, okay, or the prior pivot and draw a speed bump and confirm that this market is inside of a speed bump. Okay? And in this case, that's another element of not making me too happy here is the fact that price went through the speed bump and then came back higher, but it seems that it's not been respecting that speed bump too much. So this is all combined. The fact that the puts are above the calls, all combined, I'm really, really not happy with getting this trade with Boeing. Okay, but this is what you would do. Okay, and then so assuming this was good, so what will you do? Then you will look for UFOs below because you need to create a space on the chart that allows you to be wrong by a certain amount, and that's the space. So you will now rely on that UFO below, and this is where you would either sell one put or sell two puts and buy two puts and use this credit to buy a call somewhere above price to create your positive deltas. And if this goes up, this is going to start making money. And if it goes down, well, it's not too much of pleasure coming in, but you have this room of space that allows you to be wrong by that certain amount. And also, the most you can lose is the distance between strikes. So no matter what, you have limited risk. Okay, so that would be the approach. That's what we did yesterday. I'm not doing it today. I got two reasons to not to do it: the gray line above the blue and that speed bump. Okay, to really show that is not being respected too much. Okay, cool. Questions about this quick review? If you have any, happy to review the review. If not, I'm going to look at building an Iron Condor. That's my plan until the end of the session. Let me review the chat box first. Got you, Mark. Yes. Yeah. Well, I guess so. I guess we're all unique when it comes to trading. So, and I'm 100% here to help you in many ways and share with you my experience and what works for me and therefore what I think could work for you. But again, the magic is in the details because, as we all know, trading psychology is absolutely key component of trading, and those details are what they take your trading plan to be 100% adapted to you, the trader in you, and therefore that's how then you can really kill it because you can trade with confidence and comfort. Okay, where if you don't have confidence or you don't have comfort, even though some forget about me. I started trading in 2008. Let's say you pick a trader who has traded 40 years, and you may have this belief that that's a great methodology because this trader has traded for 4 years, but it may not match your trading psychology, as accurately as you need, and then you get in trouble. Okay, so it's important that you adapt the set of rules to the trader in you. Okay. Yes, I took it this way, Mark. I took it this way. Thank you so much, my friend. Of course, I took it this way. Thank you. Christian, agree on Boeing. Plus, in my trading plan, Jose, I know you have one, Christian. I don't trade headline stocks. Got you. Got you. I get you. I mean, to be honest, this is a very interesting rule. I don't have the rule, but I get what you're doing. I think it's a very interesting rule. Thanks for sharing, Christian. What do you call this strategy? Well, we could come up with a fancy name. This is basically, if we get a bit technical, especially Josip would love to call it a credit structure that pays for a debit structure. Okay, so that kind of approach, and certainly I do share with him the fact that I think this is a perfect name and perfect definition or or way on how to call it. Okay, so that would be the approach. But the thing is that you can do that with with more delta, with less delta, with more risk, with less risk. So there is wiggle room for adaptation. Okay, yeah, technically speaking, when you execute is a combo, right? So if you have no name, you call it a combo and that's it. In the trading platform, it would show as a combo, but a combo could be a million of different things. Yeah, and the BFF, the best friend forever, right? Well, in this case, it's an a strategy that was also named by Eric, a person that we both know, that he used to call breakout for free. Okay, in this case, it's not a breakout really because the market is falling, right? A breakout is when the market is going up, ready to break out. So yeah, I get it. Anyway, let's find another condor. So how do we find another condor? Okay, so we're gonna be looking for options that are expensive. Okay, we are gonna be looking at stocks no matter the group. We're gonna be looking at penny increment options, which you don't have to. To be honest, there are many very good opportunities outside this list. Okay, buy for free. Okay, I'll take it. We need to look at neutral strength on the daily time frame, neutral strength on the weekly time frame, earnings to not to happen too soon. So we'll do 15 days. And nothing here, nothing here. Okay, so let's scan and let's see if we got something. So it seems that Las Vegas Sun and Visa could be two candidates for us to explore. I'll check Visa. Not I'm too fan of Visa from a liquidity point of view for options trading. So let's take a look at the option chain in a moment. But it's a $200 stock where Las Vegas Suns is trading at $34. So this is kind of a good stock to practice around condors, but you're not really going to make too much money with it because unless you use too many contracts and then next you know, you pay lots of commissions, right? So I'm going to start with Visa. And if I need later, I can change my settings to pick high volatility conditions, okay? And I will likely bring in more symbols, okay? So let's take a look at this, okay? Earnings on Visa are happening far from now. Okay, this is good. This is on 7/26. Let's take a look at the distribution of premiums. 7/26. So we are talking about, let's do May 6, May 13, May 20, May 27. So what do we have? We have red, and then this blue, and then the green, and then the magenta, and then... Okay, so notice how the June 17 has more premium than June 10. So I'm going to remove that one. After June 17, we got July 15. So that one is where that one is below. Okay, so yeah, so everything would work to look into a potential trade here, but July 15 and June 10. Okay, so no June 10, no July 15 because they have less implied volatility. So let's load the spread select. I'll float it full size. Let's make it blue color. So from an expiration date point of view, we said let's use everything but no June 10 and no July 15. From a spread type, we're going to be using short iron condor. Okay, that's the spread type we're going to use. And we're going to turn on our filter for iron condors. Click OK. Here we go. And now it's time to build it with a minimum range of 1. Great. Maximum range of 5. I'll make it 3 maximum. Okay. So let's build 99 iron condors and sort and see what passes and what fails. Okay. Good. So using May 6, we have a few passes. Okay. So let's take a look at May 6 and find out more about where is that market likely going to be on May 6th? So May 6th, we are talking about 235 and 205. So 235 and 205. Do we have 235? Not so far. Not so far. Not so far. 235. That's May 13. Okay, so May 6 doesn't work. So let's look at May 13 and sort. Okay, and May 13, let's take a look at what May 13 has to give us. So May 13, which is right here, provides a range of 240 and 199. Do we have anything 240, 240, 240, 240, 240, 240? No 240 so far. We are now getting into May 20, and I can see May 20, and the numbers are less than 240. Okay, so let's resort using May 20. So I need at least 240 and more than 240 because it's the next expiration date and I don't see that. $241, and then I get into May 27. Yeah, it's looking like there is not too much premium here with the values I see. So look, because we have limited time, let's go ahead and continue with the next symbol. Okay, we had Visa, Las Vegas Sun. So Las Vegas Sun is too cheap. Okay, so I'm gonna go for IV mean minus historic above 2 standard deviations. Let's do this. Oh, look, sorry, I just picked the row below the one I wanted. Okay, so we got Tesla and Medtronic. So Tesla is obviously a very pricey stock, which is great because with few contracts is a nice trade, but at the same time maybe too much risk for some. So I'll start with MDT and see what happens, and if not, I'll switch to Tesla. So MDT has earnings reported on May 26, so we can use up to May 20. Okay, up to May 20. It's only a few expiration dates, so I'm just gonna go for it. Okay, up to May 20. Here we go. We have 3 possible expiration dates. This is a $100 stock, so we're gonna go from 1 to 3. 1, 99. Okay, with May 6, we have these particular trades built for us. So let's take a look at May 6 and look at probabilities. So we are talking about the red line, which is 111 and 100. That's the red line. So we are looking at 111 and 100. So we have one here. Okay, even though I'm absolutely unhappy there is no bid, so I'm going to ignore it. 111, we got 112.98, that would work. 16.47, 26.52, 12.64. I'm just gonna copy it, but it's a bit illiquid. 116.99, that could work too. No bids, so I'm gonna ignore it. What else do we have? 112 and 101. No, it doesn't work. It needs to be 100. 111, no, 116, that's May 6. No bids, so I ignore this one. 119.96, that's May 13. Okay, so for May 6, I got one, so we'll review it in a moment. Right now, I'm just loading the rich graphs, and then we'll analyze those rich graphs. Using May 13, I have a bunch of possibilities as well. So let's take a look at those. May 13. And by the way, I'm having an issue. Every time I go back to the chart, it changed to the stock symbol. And the reason why is because I made this blue. So when I click, it gets the option symbol on the chart. Okay. So it's not too convenient to do it like that. Okay, that's why, if you're wondering why. Also, I could set up my charts in a way where I could select here and say link only the underlying, so do not link um, the option symbols. And if I was to do that, then my chart would not change the way it was changing. Okay, cool. Okay, so May 13 is right here, and May 13, the red values are 114 and 98. Okay, so 114 and 98. So let's take a look. 114 and 98, that would be good. Okay, that would be good. And we got 1880. Okay, so a bit illiquid here. Let's see if we got something better. No, no beats with this one. 119, no beats. 119, no beats. Okay, just checking, going from up to bottom, top to bottom. Okay, and I get into May 20. Okay, so May 13 has not been too good. So we're gonna check May 20, which is the last possibility. We're sorting this out. And now let's find out on the chart about May 20. So May 20, the red line is 115 to 96 something. Okay, so 115 something, 96 something. So 115, 115, 115, 115. Where are you, 115? Is there any 115? 114.20, 114.64, 114.41, and those fell. Okay, so May 20 is not good. Okay, so basically I'm left with one. Okay, so let's go ahead and analyze that one and see if we're gonna approve it or not. So the trade that we ended up finding is the one that expires in May 6. Okay, bid is 17, ask 44, 24.50, 12.62, 7.44. So you can see this is not the most liquid option chain in the world. There is some open interest, not that much. There is some strikes had no volume today. So negotiating a good entry for this trade is going to be challenging. Yeah, wow, I'm very tempted to giving up on this trade. It's not going to be too good. Okay, so let's do this. Let's explore the trade. So we go through the process. Again, there are more symbols. We just have no time. Okay, but there are more symbols in the list. If you were to come to advanced option scan and change this to top increase of CIV mean in the last 5 days, which is technique number 3, or Tesla, which I haven't checked, and now you're gonna get more. Okay, so there must be some trade out there. Okay, I just talking about being perfectionist earlier. The screen is pixeling, guys. Is it for you only, Mark, or everybody's seeing that? Because I'm looking at the screen on a totally different computer, and to me it looks fine on my end. Let me know if that's still a problem, and I'll do something about it. So anyway, so I was talking about being perfectionist earlier, and that got me started with find here. Okay, now, okay, got it. So that got me started, going from top to bottom. I should have been more pragmatic given the amount of time left. Sorry about that. Let's see, what else do we have here? Let's try to put one trade which is better in place. Okay, let's check Lulu. Okay, let's take a look at Lulu and see what we've got. So earnings are happening. No, not too happy. Red line is inside the blue lines. Let's try to get something a bit better. Okay, look at Tesla. Well, Tesla should not be too good, I would say, because earnings were reported already. Okay, but still, implied volatility is huge. Okay, no wonder the stock has been falling by 5% today. Very related to Twitter, probably, as well, that reported earnings today, by the way. Okay, so let's explore Tesla. We may have an opportunity here for a nice directional trade. Of course, this is going to be a pricey trade, Okay, so depending on the strike price increments, I would say the minimum we're gonna get is at $500 of risk. Okay, but let's explore. So earning already took place. Okay, so we got plenty of expiration dates all the way to this date. So let's look at the skew. Okay, and take a look at 2 weeks from now. Okay, a few weeks from now. So let's see this one, this one, this one, June 3, and then we got June 10. So June 10 seems to be providing more volatility than other expirations. Okay, so I'm gonna give it a shot at June 10 just because we have limited time. So I'll give it one shot. Okay. Okay. So spread select Tesla. We're gonna look at June 10. We are building an Iron Condor short. Okay, strike price increments minimum should be fine. 5, that's what I thought. I'll keep it as 5.5. Okay, so maximum risk for the trade would be $500. Let's see if we can find something that works using the filters. Load a template, Iron Condor, click OK, sort. We got 3 that pass. Okay, 3 of those condors pass. Let's take a look at the statistical range on the chart. So with June 10, which is here, we are talking about 1085 to 593. Okay, 1085 to 593, and here we got 1060, 11 something. Okay, so that works, but that one is 639. That one is more than 5 something. So it's good on the upper side, but not on the bottom part. Okay, so my friends, I think that we're gonna have to give up on this. I'll give you one last shot. See if one trade. I mean, I'm sure we look at all the expression dates, and there are trades to be taken. I'm pretty positive. I'm just struggling for time. Let's look at ATVI. So ATVI reporting earnings far, far, far from now. Massive, massive, massive implied volatility. Like massive, massive. Really, really impressive volatility. I'm not comfortable trading this stock. There is something someone knows I don't know. This huge level of difference between the historic and the implied volatility is way too huge. Why is that? What was this date? So this date was January. Okay, I'm opening the door to this. Okay, why? Because my settings for historic volatility are 1, 2, and 3 months. Okay, so 3 months, and this crazy move happened, before 3 months, and after those 3 months, that stock has been ranging, and therefore very quiet. Okay, and now it started picking up direction, but it's been very quiet until now. Therefore, the values of historic volatility on the last 3 months are, relatively, normal. So I'm not so concerned anymore about that. Okay, so let's take a look at this and find out if there is any opportunity. Okay, I like this. I like this very much. I like this very much because many of those lines are very close to each other, while typically you have more like, the shorter expiration date has more premium, etc. And in this case, you can see that they are very close to each other. So very powerful volatility smile. Let me add more strikes. Very powerful volatility smile on the light blue going very high, as well as the one which is pink. those are the ones that smile the most when we go away from the at-the-money strike. So I'm going to be checking May 27. I'll check one expiration date, again, because of the limitation with time. So May 27, that's my choice. May 27, I will also check May 20, just because it's monthly. Just in case we lack liquidity, we can always check the monthly. That normally is more liquid, okay? So we have that. Let's do it one more time. I could have saved myself a bit of time by not closing the window earlier. This is muscle memory. So we got the expirations, we got minimum range. We're gonna go for one minimum, maximum two. This is a $70 stock, and load the filter with iron condors. Okay, and build 99. They're sorted, and we end up with a few trades that pass with May 20 and May 27. So let's take a look at May 20, which is here. We are talking about 81 and 71. So 81, 71, we got 83, 73. So 83 is good, not 73. 81, 71. So we have May 27, but May 27 provides less. Okay, so I'm just looking at this. Okay, so 78.68 and 83.43. You'll see what I'm trying to do here, just to give you an idea. No, not this one. This one. Where's graph? This one. Coming back to explain all of this, okay? Because I'm probably confusing you now. Yes. So notice this one here. Okay, this I got two, right? The one, on the right and the one on the left. So this one has 83.73 and the other one got 78.68. Okay, so the question is, what if I do both together at the same time? So that's 67.5 and 69. I'm going to add two more calls, and I'm going to add two more puts. So I'm doing two iron condors at the same time to tweak the range. Okay, this oftentimes it will work, not always. So on the call side, 79 and 77.5. 79 and 77.5 on the call side. On the put side, 69 and 67.5. So if I do that, what happens? What's my risk profile? Okay, so yeah, it's a bit disappointing, to be honest. Yeah, it didn't help enough to increase my break-evens. Okay, it really didn't help at all. In certain cases, okay, you can get this a bit higher, and this, it all depends on the premiums, of course. You can get this a bit higher, and this is a very weird double iron condor. Okay, but if that was that high and that was that high, so you have a profit zone that goes from here to here, which is wide enough. It matches our requirement, and then the risk would be this amount. Okay, this amount here. So that would be okay. Okay, but the problem is that we have red zone here, we have red zone here, and therefore the range is really not widening. The range remains as this. Okay, so it doesn't work. But I wanted to try just to open your eyes to additional possibilities, and because this works sometimes. Okay, but it doesn't work in this particular case. So I'm just gonna leave it there, and I'm just gonna call it a day, guys. Really, I thought that today we have plenty of times to put some trade together, and today actually is a day where yeah, we got no go, with the directional trade with Boeing, and then with the iron condors as well. So hey, that's what it is. That was the day. Okay, let me take a look at your comments here. ATVI missed earnings and is about to be acquired by Microsoft. Could explain the high implied volatility. Yes, Joe. So that's probably the case. Okay, but again, um, certainly when a news like that is about to happen, you can go the route of being like, you know what, I'm not going to take the trade because there is this fundamental risk. Again, if the premium justifies the range, and then we can tweak the trade the way we do and all of that. So, I'm not that concerned. But it was weird for me to see that chart earlier. But it was kind of comforting to see that the reason for that very slow historic volatility was this very large gap. Okay, so I was not too concerned about that. Okay, but good for you to share that, Joe. Discouraging call buying, yeah. Call buying is not a good idea. VIX is high, isn't it? And it's a headline stock, exactly, Christian. I get you. Now I know that about you. Very good, everybody. My friends, see you next week. You guys take care and keep up the good work as always. Hopefully, today's session, as always, was useful to you. And every time you're picking up some more and more kind of like, I was going to use the word tips. It's not like it's tips because this is serious stuff that we're doing, building a process. But again, tips of experience, maybe it's a way to say it, where we find situations that you may not have found on your own, and by doing it together, it helps you to develop yourself. Okay, very good, everybody. Take care. See you soon. See you next week. Bye bye.